Hey, welcome back to the channel. My name is Steven. I'm a pharmacist and I own 52 units of real estate. So today I had a great question in the comments asking thoughts on the way that I'm going to change how I file my taxes on TurboTax once I'm married. So he's responding to a video I did talking about how I've done my own taxes for 7 years on TurboTax. And believe it or not, people are surprised when I say that, but I've been doing my own taxes on TurboTax for the past 7 years. And for me, I like doing it because I like to learn about the tax code, right? And you cannot assume that just because someone's a CPA, that they've been doing taxes for a long time, that they know tax codes related to real estate. So for me, I'm really big about self-education, so I'd rather do it myself. And obviously, if needed, I can pay someone as a consultant on the tax law to answer any questions that I have. I'd rather do that versus just give everything to a CPA and rely on them to do it themselves. I'm huge on trust but verify, and in order to do that appropriately, you have to be knowledgeable about the tax law, the tax code. So anyways, and how am I gonna change the way I file taxes once I'm married, and will this affect my decision that year based on my wife's income? And that's the first part of the question, so let me answer that first. So obviously we're both W-2 pharmacists in California. I think collectively we're about low $400,000 in W-2. If you add up my W-2 income as well as her W-2 income, this does not include my real estate income or my side business income as well, right? Just pure W-2, we're low $400,000. So we'll probably pay about 50% between federal and state tax being here in California, right? That's the sunshine tax, as we call it. So we would take home, let's say $200,000, give or take, which is about maybe $15,000 a month in net take home pay. So obviously we're both very, very high income W-2. So for me, once we're married, basically I think I'm gonna file taxes for both of us, right? Like her taxes aren't as complicated. She has a W-2 job. She has some dividends income from like Vanguard, and she owns a rental property with a partner. So that, I already do my own taxes. So to me, it's pretty easy. When you have a partner and it's 50-50 partners, well, you just get 50% of everything, right? You get 50% of the income, 50% of the expenses, 50% depreciation, 50% of the proceeds if you were to sell the property. So for me, I would file jointly, and why I would prefer to file jointly is because we're going to try to take advantage of the real estate professional status the moment we have kids. So once we have kids, what's going to happen is I'm probably still going to work full-time, right, as a pharmacist, because I make more. I'm in pharmacy management. My schedule is Monday through Friday, a little bit more flexible. But for my fiance, she works 4 10-hour shifts. And she works variable times, so she might work at 6 a.m., 7 a.m., 8 a.m., 1 p.m., but she works 4/10, so she gets 3 days off a week. So most likely when we're married and we have kids, she's gonna go down from full-time W-2 pharmacist down to part-time. So maybe she'll work 20 hours a week, which is 0.5 FTE. So at that point, we can qualify for real estate professional status because she's probably gonna become a realtor, right? She's gonna help me manage my real estate portfolio. She's gonna, help me find deals. So she would basically be able to document, 21 hours of real estate related activities, right? Between being a realtor, between managing my portfolio. Maybe she's a loan officer as well, right? So she needs to demonstrate that she works more in real estate than she does in pharmacy. So it's easy, right? If you do 20 hours at pharmacy, you have to do 21 hours as a real estate professional. Or give yourself some buffer, maybe you do 25 hours as a real estate professional, right? And it's not hard, right? If you drive clients around to see houses, you can rack up hours easily, right? If you spend a whole day driving someone out, a potential client, to check out houses, that can count towards your hours. So basically she would start documenting her hours as W-2 versus as a real estate professional so that we can have proof and file as a real estate professional status collectively. So what's nice about that is now with my high income W-2 plus her part-time W-2, we'll probably be making, let's just call it mid 300,000s. And let's just say between my real estate portfolio, our real estate portfolios, if I have $300,000 in passive losses that I've been carrying forward, then the year that we qualify as real estate professional status, that $300,000 of passive losses can be used to offset my $300,000 of active income, right? And at that point, my income would be wiped out. So I would basically pay zero, I would claim zero income tax for that year because of the passive losses from real estate. And at that point, I would get $150,000 of tax refund from Uncle Sam, right? Because essentially my income is zero and I already paid $150K of taxes. So that's how people say they pay zero taxes to the IRS. They're basically taking advantage of the real estate professional status tax code, which allows you to write your passive losses of real estate, your passive paper losses from depreciation against your active income. And if I can wipe out my $300,000 active income, I would get back $150,000 back in taxes, which is about $10,000 a month, or $12,000 a month in income, right? Like take home income. So that's how you increase your income significantly. So ironically, by doing the real estate professional status, so by my fiance, future wife, stepping down to part-time, making less as a pharmacist, but we qualify as a real estate professional status, I can use those losses to offset our active W-2 income to get back more in tax. So my take home will be better as I get back tax money that I was paying Uncle Sam. And at that point, we actually will have more money take home collectively. So in the prior example, let's just say, let's do some easy math here. Let's say I make $200,000. My fiance makes $200,000. Collectively, it's $400,000. Assuming a 50% tax rate, we pay $200,000 in taxes, right? Total. However, if now my fiance goes down to part-time as a pharmacist, so she goes from $200,000 a year to $100,000 a year, plus my $200,000 a year, that's $300,000 a year. So my taxes is $150K that I'm gonna pay Uncle Sam, right? But now at $300,000 a year, we qualify as a real estate professional status. That means that the passive losses in my real estate portfolio, let's say I have $300,000 in passive losses, because I do, cost segregation, accelerated depreciation, anything that carry forward, passive losses are carrying forward, right? If I do renovations and accelerate bonus depreciate, this is how you get all those advantages. I can use that $300,000 to basically offset our $300,000 active income, and I basically get, all my tax refund back. So I'm netting, taking home in my pocket $300,000, right? Versus if I have $400,000 as W-2 and we don't have real estate professional status, those passive losses just keep on carrying forward, and we only take home $200,000, right? But keep in mind, the downside of doing this strategy is you're forced to constantly buy real estate, you're forced to constantly depreciate your assets, and you're forced to be in this hedonic treadmill of buying real estate all the time, right? So, for me, I would probably only do it when I'm W-2, but then the moment I step down from W-2, maybe I don't need to do as much unless I blow up in business and I need the passive losses, right? So that's why, once you go in the real estate game, you're forced to buy real estate if you want to maximize tax savings, or you don't care, just pay the taxes as you go, and then you're not forced to always buy real estate, right? So, you always want to buy real estate to fit your lifestyle, not be a slave to real estate. I'm huge on that on this channel. So yeah, that's how we would do it. So to answer that question, we would file jointly together, and my fiance would go part-time so that we can qualify as a real estate professional status collectively, so that our passive losses from real estate can offset our active W-2 income. So that would be a win-win. We make more, we take home more money, we keep more money, and then she's able to be part-time, right? And then maybe one day I'll go step down part-time and then do the same thing, right? So that's how we would strategize it. And I already discussed this with my fiance, and it's probably what we're going to do. She already told me she wants to go to part-time. So I said, perfect, we can become real estate professional status. And then the second part of the question is, how would you adjust health insurance from your W-2 once you get married? So, the moment we get married, most likely she's part-time still, so she still would get benefits through the hospital she works at. But, it's probably easier to just have the insurance where I work as a W-2, right? So that it's me and my wife under insurance, and then eventually we have kids, they'll all be under my health insurance plan at work. But once I step away from my W-2, then, we just have to go, buy insurance on Covered California, because I'm in California. And that has more costs associated with it because the employer is not subsidizing some of it, and I don't get that bulk discount, right, or that group discount. So that's how we would probably do our insurance. She'd probably go under me until I leave my W-2, and at that point we just would buy insurance on covered California. So hopefully this answers your question about how I'm going to change how we file taxes once I'm married, once we take advantage of the real estate professional status, and how we're going to consolidate our insurance once we're married. So great question. And if you want to buy multifamily real estate with some guidance, with some mentorship, check out my mentorship program down below. Otherwise, please like, comment, subscribe. Let me know what questions you have, and hope to see you next one. Thank you so much.